we saw a sharp fall around 2 to 3% in the US market in day before yesterday on the 24th of July. But on yesterday there was also fall, but the one great news which is coming that the US GDP growth in the second quarter, they are following calendar quarter, so it is April, May, June, have data has come out to 2.8%, which has beaten the estimate of 2.1%. The US economic growth accelerated by the more than forecast in the second quarter, illustrating a demand in holding up under the weight of the higher borrowing cost. So the rate cut has not happened from the past 8 times in the US, and borrowing cost is still very high in the US. Gross domestic product increased at 2.8% annualized rate in the April to June quarter, raising after rising 1.4% in the previous quarter. So in Q1 it was only 1.4%, but in Q2 it has only doubled only to 2.8% in terms of the annual. The economic margin main growth engine was personal spending, advanced 2.3% also. So the major factor out there is the spending by the public, uh, private consumption and the public spending. But as compared to India, we are still relying on the government spending when it comes to the growth rate. A close watch measure to underlying inflation rose to 2.9%, easing from the first quarter but still above estimate. The Bureau of Economic Analysis reported a sure growth. Even though the pace growth is picked up from the first quarter, the figures still represent a modernization from the last year. Consumer spending and the broader economic activity have cooled under the weight of the high interest rate, which is the simultaneous helping to tame the inflation gradually. So they are saying that if more and more rate cut will be hitting, the borrowing cost will be reduced, and the more personal spending will be happening. This will also help the economy to grow. The bold Wells Federal Reserve, which is trying to pull out the soft landing from the economy and kindly to start cutting interest soon. In like from September, they have rate cut is expected in the September, and they have election in the November. However, I will be fine balanced to cool down the labor market just enough without putting millions of the people out of the work. Especially unemployment has now risen 3 straight months. Inflation is right. This one is the which factor which is fearing the US is in rising in the inflation. This is a perfect report for the Fed. Growth during the first half of the year is not too hot. Inflation outline to cool down and look within the reach. Treasury yield rose to the and expenditure rate lower. Policy makers are not expecting to rate cut when they meet next week. So next week they also have a meeting, but they are not expecting any rate cut in the next week, though they are expecting in the September time.